Hey folks, Dan Frio here, the rate update. Today is June 16th, 2021. It's Fed Day. What are they going to do? That's what we're going to talk about next, so don't go away. Okay, so everybody's got an opinion on what's going to happen today with the Fed meeting. So let me give you some details behind that, but let me let you listen to Jim Cramer on what his words are about what he thinks the Fed's going to do today.
In terms of how you're thinking about the markets today and tomorrow, there's a lot of positioning and adjusting ahead of what we may or may not hear from Jay Powell. What's your expectation? What do you think is baked into the market in terms of how the market may react one way or the other, depending on what they hear?
Well, I think that watching your coverage all week, you have to believe that he has been saying, I'm going to stay the course. But there's this just torturous Q&A thing that he does, which is just a nightmare. And there are going to be people who just ask about the PPI 8 straight times, and they're going to try to wear him down. And maybe at one point he's just worn down. He goes, yeah, I know we're buying too many mortgages, something like what Kyle Bass said. Or he slips up. I mean, Jay's really practiced. But on the 8th question or the 9th question, I think he's going to say, listen, I'm going to look at this, and that's going to freak people out. It's not going to necessarily be the statement. I think it's going to be much more of just the endless heckling by the press about what they think the, let's just say, the inflationists want to hear.
Well, let's first talk about what is the Fed's mandates. They have two, basically. It's to keep the money supply in line, keep inflation in check. That's that one big part. And the other part is the employment picture. So the Fed basically came out and said they're going to scrap the inflation piece of things and just focus on full employment at this time. So what are we going to see? Well, here's my analogy behind all this, but let's first watch a quick little clip from those experts on Wall Street on what they have to say.
We wanted to kick off, if we can, on macro topics with a Fed meeting coming this week. You've raised some eyebrows of late at a conference in Tokyo saying you think rates will move higher early next year as opposed to later than that, and described yourself in your conversation with Betsy today as a hawk a couple of times. So talk us through why you have that view and how it's altering your behavior as a CEO.
Sure. Well, we're in a very unusual situation. We have record low rates, historically low. We have record high fiscal stimulus, and we have synchronized recovery of the global economies. Not every single country, but most countries. And I just heard the comments about Europe, and Europe's following the US, which is following Asia. So there's an enormous number of positives going on right now. We're seeing inflation creep in. And the question is, when does the Fed move? It has to move at some point.
Okay, so the common theme you see behind all this is inflation, okay? But the Fed came out and said they're not going to really concern themselves with inflation, and they're going to worry about full employment. Well, you have to worry about inflation because if it gets way out of hand, it's going to be hard to reel back in at some point unless you just astronomically boost rates out the roof. So let's break down the inflation front for a second, and let's kind of dissect just some of the areas that inflation is playing a role in. So the first thing is you have lumber. Lumber's up 240% over the past year. It's down 40% recently. You have oil. Oil prices continue to spike, but we have big demand. All these countries are coming back online, so you're going to have a quick little suck out of the supply. But it should be filled in, and we're getting back to normal. Remember, guys, we went from, let's say, this capacity in everything, food, energy, everything. And basically the world stopped. So then we went down, and our consumption is down here. And now we're getting back to normal. So when you start triggering, okay, what did we do year over year? Well, your trigger point that you're starting with is here, where we were 2 years ago. Okay, so that's one of the things we want to focus on. But then the next thing is food. Food's getting expensive. Why? And then there's a common theme behind all these. So let me get to that. Housing, rents, all this stuff. Well, let's. What's the biggest piece of this puzzle that's affecting things? The cost of goods, which are fluctuating tremendously, and labor. Labor's that area it's a sneaker behind the scenes that if you saw the JOLT index last week, and JOLT is basically a study of how many job openings there was over 9 million job openings, a historic high. So what's that telling us? There's a lot of people staying at home collecting the excess unemployment benefits, and they're not getting back to work. So we have wage inflation that is going to come back down once everybody gets back to work. Okay, so here's my synopsis on all this. I think September is going to be a key or pivotal role or pivotal time of our economic time calendar. Here's why. You have a lot of forbearances. Forbearances is basically when people get to postpone their mortgage payments. Okay, a lot of them started in March of 2020, and then it lapsed through 2021. Some are even getting extended through the end of July or June, and then September. Okay, so you're going to have almost everybody's forbearance stop or end in September. It's a pivotal month. Then you have this excess unemployment benefits that are getting paid out. Those are going through when? September. Okay, so those are two pivotal roles. When people are basically getting forced back to the labor force, you're going to have a glut of people entering the labor markets, creating a big supply of labor. The demand should basically stay constant, and then you'll fill in that gap. Okay, so labor, I'm thinking our labor costs are going to start decreasing. Because we have now capacity in the labor markets, we're going to start seeing everything starting to neutralize. Okay, at that point, where I feel things are going to happen, I don't think inflation is going to run out of control. The latter part of this year might still seem hot, but the first quarter of 2022 is going to be huge. So we're all focusing on that right now. We have to, because we have to look at the future. But what's actually going to happen, in my concern, is Q1. Is the Fed going to be way under the gun, and is inflation going to run rampant? Then we're going to have major problems. If we get back to a little bit normalcy in the world and in our economy, we're going to see things to stabilize. But in a whole key of all this, you're going to see rates drop. Why? Rates have been at historic lows. Why? We hit a pandemic. Okay, basically the world shut down. So we hit times that we've never seen before. So the Fed did everything they did to drop rates to help consumers. When that dissipates, we'll get back to normal. Normal is a rates of 5-6%. Okay, so that's where I see us being in the next year or so. So if you like your mortgage numbers now, so if you have a rate that's 4.5 or lower or higher, please reach out to us so we can give you an analysis of, can you refinance right now and save? What we're doing with a lot of people is they're financing. They took a 30-year term out a couple of years ago. Now we're able to put them into a 15 or 20-year term, same payment, cutting 5, 6, 8 years off their mortgage with the same payment, saving them a lot of money. A lot of people right now said, we lived on credit cards. We lived on this, and they need refinance and a bill consolidation. Others are saying, you know what, I don't want to sell my house because nothing's really selling right now. Wait a second, let me rephrase that back. A lot of people aren't selling right now because they're in a forbearance and they don't want to sell. I don't want to sell my house. I love where I live, so if I sell, I'm going to sell way up here, but I'm going to buy up here. So what do? I just stay put. So I won't ramble on. I'll let you guys know today the Fed is going to make their announcements, what they're going to do at 2:30. Every word, like Jim Cramer said, is going to be under a microscope. I don't think there's a win-win situation here. What I see is in the next week, from here through at least Friday or Monday, we're going to see rates go up. We're going to see the stock market pull back. I hope I'm wrong. I think that's what's going to happen. And it's been happening every Fed meeting. The Fed comes out, everybody's worried about what they say, so the market's correct. And then they come out and they polish, what's the thing, and excuse my English here or whatever. It's like they polish a turd or put lipstick on a pig to make it look good, next week. And then everybody forgets about inflation and forgets about this. And they're like, oh, the Fed's not going to do anything. We're just going to wait for the employment numbers. So again, what I was saying is if you have a rate that's high, if you're looking to buy a house or you're looking to refinance, you're in a forbearance, you need a bill consolidation, you're looking to repair your house, please reach out to us. I'd love to help. Head out to us at the Frio team to find out more about us and how we can help you. Pretty simple to do. You just go to, and we're closing in on 14,000 subscribers. Maybe you could be the 14,000 subscriber. I'll tell you what, the 14,000 subscriber, I have a system that can actually compute that. I will give a pair of ear pods out to that person, and I'll do that as soon as we hit that number, and I'll do it live on a live stream. But the next thing is, if you would go to therateupdate.com, you can find us here, click right here to apply now. That's the best way to do that. If you'd like to call us, give us a call at 844-775-LOAN. What most people are doing right now is they're scrolling up just a little bit, and there's a calendar right here. You can click and pick your day and time for a consultation with me personally. You can pick a 15, 30, or 60-minute consultation. I hope you don't pick 60 because I think that's way too long. It's pretty simple to do. Just click that. It'll open all the days that I have available and the times. You can scroll through there, pick the day and time that fits your needs. I will reach out to you at that point and go over any questions that you have. I'll help you try my best to accomplish that. So that's it for today, guys. I greatly appreciate you watching. I'll be back later this evening and tell you what the Fed came out and did and how the markets reacted. So talk to you then. Bye-bye.